trading is kind of a lonely activity. How many options traders are there really out there? There's not that many, and we're all kind of doing it solo.
At the end of the day, we're all responsible for our own decisions. And that's one thing that trading will teach you. No matter how many workshops, how many courses, how many gurus you talk to, you're clicking the button at the end of the day. You made the decision, you're an adult. But I would highly recommend people think twice. And if it sounds too good to be true, too easy, it is.
We don't have a guru strategy for you. We're going to show you how we do it successfully so that you can do it successfully too.
We just want to make sure that we are aware of the risk and the things that you shouldn't do before you do it. But there's two other items that I think are really happening. So one is the repo market.
I have no idea what the repo markets are.
The repo market is essentially a short-term loan that companies, brokers, hedge funds, etc., can use to settle trades, negotiations, borrowing, right? It's access to capital that happens immediately. So that's very, very interesting.
That is interesting.
So that's one thing that's happening. The other thing is that round 2 of our soft launch, this is a prequel. Is that what they call it?
Yeah, it's a prequel.
Yeah, it's our second prequel to our official launch of the Behind the Trade podcast that will air officially at the end of December, going into New Year's. But before we really kick things off here with today's topic, Greg, how's your day going?
How's the day going?
Yeah.
Oh, it's going great. We spent the whole day setting this up. I'm excited. We're getting started. We've got a lot to talk about. I think people will enjoy it. Yeah. Let's go.
Yeah, it's exciting. We got all the equipment, everything going. So maybe just to reintroduce people, because there's going to be probably limited people that we put this out to, depending on editing and all that. But Greg, maybe you can help us kind of recenter what this podcast Behind the Trade is about. And actually, before Greg does that, guys, feel free to go ahead and subscribe to the channel early. We already have a good amount of subscribers, but come on, help us out. It'd be awesome to get to over 1,000 before we officially launch. But Greg, what is the point of Behind the Trade?
Yeah, I mean, the goal of Behind the Trade is trading is kind of a lonely activity. How many options traders are there really out there? There's not that many, and we're all kind of doing it solo. We've found this group of 3 of us that trade together, and we found that bouncing ideas off of each other, talking about the decisions behind the trade, why we did this, why we didn't do that, mistakes we learned, was immensely valuable. So as we're having we have these monthly dinners to talk about those things. We're like, Nick and I are like, everybody would enjoy this. Everybody would benefit from having these conversations of where things went wrong, what went right, what's working well that month, what's not. So we decided, why don't we put this out to the public? Why don't we put this out to the public? Everybody can benefit from it.
Yeah, I think that's well said. What Greg is referring to, there's 3 of us. It's myself, Greg, and our friend Donnie Etz or Junior. And once a month, for better or worse, doesn't matter how our trading month went, we meet up for dinner and we celebrate. We celebrate because we got through another month of learning. Because at the end of the day, we're learning every single day, every single trade. It's just an experience. And some months you don't do so well. Other months you do very well. But at the end of the day, having a group of people to hold you accountable, I think, is the real impact of those dinners. And like you said, having a group, I can't recommend enough for everybody. If you're going to start trading, find a group, find people, whether it's online, whether it's people that you'll find in the comments, whether it's people, if you subscribe to my X, there's lots of people there that trade. Find a group of people that you resonate with and use them to talk about your mistakes, your questions. But we've learned a lot from our biggest failures. And I think that's allowed us to iterate to become as successful as we've been. I mean, I don't want to say we're necessarily successful, but we are. I'm trying to be humble here. But I think it's the accountability that we hold each other to. You're not just sitting there in a room alone making these mistakes with nobody saying, or with no one to account to at the end of the month. right? We have to account to each other at the end of the month.
Exactly.
So
there's no hiding the ball. And it's important that it's at the end of the month or the beginning of the next month, because it lets you reset, say, hey, just like a business, this month I did this. Next month, this is what my plan is. This is my trading plan. And it's kind of the same thing. We're going to hold this podcast 4 times a month. And one of those episodes is going to be at the end of the month where we're going to do just that. How did your month go? What are you looking forward to next month? Where do you think things are going to go? What kind of strategies are you going to put on, right?
yeah, no, exactly. And the idea is not to just talk about the good stuff, because honestly, if I were you watching, I wouldn't care too much about the good stuff. I mean, the good months and the profits and all that, yeah, sure, that gives us, I guess, credibility. But you're going to benefit from, Greg, where'd you screw up? What mistake did you make? You know, what stupid idea did I have? What basic mechanic rule that I have for myself did I decide, nah, this time's different. Let me break this rule. And so hopefully you guys can learn from our mistakes as we're being very vulnerable and transparent and sharing with you guys our biggest screw ups financially. You know, it's not just you're going to see this, but our wives will see it. Our in-laws will see it, you know, so it's a very vulnerable space to be in. But I think, you know, selfishly, it's going to make us better as traders, and it's going to force us to be more accountable, not just to our own little group, but now to all of you who are going to subscribe and hit the like button, but also to any family member that might be watching this, any person from high school or college that are saying, Greg, what the hell are you doing? I didn't know you did this. You know, it's a vulnerable space to be. So I'm excited to do it with you, because at the end of the day, I don't care about anyone else's opinion.
Yep, same.
All right. So maybe we can talk a little bit about what this isn't, because as I think a lot of people know, I have a option crash course that I guess by the time this air, the cutoff date will have happened. December 8th is the last day to pay and sign up. But honestly, doesn't matter. Don't feel like you missed out. We've essentially been oversubscribed for a week now, so there's no more seats left. And that's what I call the option crash course. And we will be doing another workshop in January. We'll set the date for that. Probably in about a week, we'll release what the date is for that. Greg and I will be hosting that. And as far as what that entails, we could talk more about that maybe next week during next week's episode. But you don't need to know anything, really. The idea is to start you from nothing to be able to go and have confidence to place your first trade with decent mechanics, actually understanding how options work and seeing the whole picture that you don't get from YouTube. YouTube, you'll get little snippets of ideas, but so that's what they are. And then we're going to have other workshops that dive into deeper topics, more higher level, or deeper level, whatever you want to call it. But I want to emphasize something. I feel like the word course has had kind of a negative connotation to it. It sounds kind of sleazy these days, and I kind of regret calling mine the options crash course. And so here in our prequel of a podcast episode, we're going to go ahead and just reframe this to a workshop, because that's really what it is. It's a workshop. And what we're trying to do, contrary to what you see a lot of potential other people out there doing, is we're trying to teach you how to fish. We don't want to have you have to come back to the store every single day to buy your fish. What I don't want is these courses, or now workshops, to become something that people feel like they have another subscription bill to pay to. Ideally, you do a workshop, maybe you do 2 workshops because they're on different topics, but then you go and you're on your own, and your engagement with us is purely about your successes or your questions, or sharing, you being vulnerable, sharing your mistakes and your losses. What are your thoughts on that, Greg?
The question that is always asked in this type of, when somebody's putting on a course or a workshop, is, if you're making so much money, why are you putting on a workshop? Why are you putting on a course and teaching other people how to do it and charging money for it? And the answer for us, or at least for me, is we've made a lot of mistakes over the years trading, and we figured this out together and with our friend Donnie. And we didn't have a resource to understand these mistakes before they were made. And options volume has grown exponentially since 2020. There are so many more people doing this, and it's risky and it's dangerous if you don't do it right, if you don't have the safeguards on. So that's the reason why we're putting on this course. That's the reason why I would like to put on this course.
Yeah, I think that's well said. Should you do inverted strangles? What about trading futures? How about 0 days? Should you be naked? Should you be covered? What is the actual risk? Are you going to go to zero? Are you going to lose everything? Should you sell covered calls? When should you do it? When do you place your trades? I mean, we have had to learn a lot of this through trial and error, trial, error.
Yeah, right.
So, but I think this kind of takes us into something that we want to talk about, and that I kind of teased out a little bit to my ex-subscribers about the concept of the gurus out there, just in general. But obviously in our niche, we're going to think a little bit more about what we do, and this idea of somebody feeding you trades or you copying their trades. I mean, I had a recent experience. Greg had a recent level-headedness recently, but maybe you can set up the conversation to, because I'm the one that actually did the thing that we're going to tell you that not to do. You're your own person, but maybe keep a very cautious eye, and maybe you can be smarter the way Greg was and not have to do the thing to learn the thing the way I did.
Well, yeah. So we had a colleague purchase a course, and Nick learned about the trading method in it. And basically, it's a proprietary system where this person, this guru, says, hey, every morning they say, hey, if the conditions are right, put on this trade at this strike price with this number of contracts, because that's what my black box proprietary system dictates you should do. I was a little skeptical of it for a few reasons. One of them is it used something called the martingale approach. So the martingale approach says bet $1, and then if you lose $1, the next day bet $2. And if you are successful, you break even. If you are unsuccessful in that trade, now you're down $3. So the next day, bet $3. If you're successful, you break even. If you're not, you lost $6. And you keep doing that until eventually you're successful and you break even, or you have a little bit of profit. But there's a lot of problems with that approach. One of them is martingale strategies have been used for 100 years. I'm not kidding. I looked this up. It's been around since the dawn of time. And the problem with it is eventually you get to a place where you've lost so many bets in a row that the next bet is catastrophic. And eventually that will hit. Now, the stock market, under this guru's approach, he was like, well, we've never been in this conditions 8 days in a row in the history of the stock market, so it's not going to happen. Well, maybe, fine. But if you're on that 7th day and you're betting half of your portfolio on this trade, you're going to be very nervous, right?
Yeah. Yeah. So let me maybe tell you a little bit about my experience, because a lot of times when I hear these things, I like to do a very, very small trade to just understand the mechanics of it. A lot of times you can read something, you hear an idea, see it in a book, see it on TV, but until you actually go and you try to do the thing, it's really hard to wrap your mind around it. And I agree with everything Greg just said. But those aren't the reasons why I ended up being against this approach, which is interesting. So first of all, as far as that kind of doubling down to break even, with this system, you're not actually doing that. So you mentioned you bet $1. If you lose that $1, you bet $2. Well, with this system, the idea is you bet $1. If you lose that $1, you want to bet $3 because you're actually trying to make a profit at the end of the day. You're not just trying to break even, right? So that's one thing. Again, you got to give kudos where it is. Like I will give, at least this individual in this course its credit. Like this system, he's got receipts since 2023. It's never failed. With that said, they also haven't had a lot of occurrences of trades. And so it's one of those things where if you don't have enough at bats, it's really hard to know if something works that well or if the occurrences and the right set of events haven't approached enough where it's worthwhile going. So anyways, in my situation, I reached actually one of the peaks of we've never gone more than, you said, like 8 times where you have to kind of re-up the ante to try to break even or make a little bit of profit. And so for me, it started off with 3 contracts. Then it went to 6 contracts. Then it went to 15 contracts and then 30 contracts. All right. So it got pretty big and it got kind of out of hand. Now I'll spare you guys the story. It ended up fine. I ended up being profitable, barely. Like it was like cents away from not being profitable, but it ended up working out. But what I learned during that time, Greg, was that one, this really goes against one of our biggest principles when we trade and what we talk about in our courses or now workshops, which is stay small. No one trade should ever hurt you. You should be able to lose a trade and it's fine. It's not going to ruin you. If there's one lesson that we have learned and that we will emphasize over and on the workshops, it's everyone can say stay small. We're going to tell you what that means and how we stay small and how we make sure that we're always thinking about that, because you don't want any one trade to ever ruin you, because I expect to lose a trade. With our system, our approach, we have a pretty much about, call it anywhere from a 90 to 94% wins on our trades. So we expect that we're going to lose anywhere from 10 to 6% of all trades. It's going to happen. It's the nature of the game. That's the math. And so you don't want any one of those to wipe you out. So you have to be very smart on how you position size. And I think that's one of the unique things that we're going to be able to bring to a lot of people out there in these workshops. So one, this constantly scaling up just breaks that fundamental rule. Like if there's and we're going to make like a bill of rights for what we do, that might be number one.
Scaling up is not the answer.
No, yeah, but
Yeah.
Staying small might be like
Exactly.
number one. Yeah. So that's one thing that I didn't like about it. That, yeah, in your mind, you think, okay, like I get how the system works, but you don't realize like how quickly it gets bigger and how fast it happens. And so that kind of caught me off guard. The second thing that I didn't like was that when all was said and done, all that stress, I would say, that I had to feel, that I was like, I don't like this. Like, this is not my style. This is not my approach. I don't like the risk I have on the table. It's just, I don't like it. But I had to stick with it to finish it out. But what I realized when it was all said and done, look, I won on the trade. I was profitable. But all that work, all that time I had to wait almost 3 weeks before we had the setup to put a trade on, and I only made $1,500.
And was that capital efficient at all?
Not at all. It wasn't time efficient. It wasn't capital efficient.
Stress efficient.
And it was only $1,500 at the end of the day.
Yeah.
And, like, even if you have a small account, making $1,500 in the course of all those days, I'm telling you, that's not good. That's really, really bad. So I had to do the thing to really come to that opinion. And now I'm convinced that it's just not good. What you said, yeah, that makes logical sense. I agree with what you're saying. But for me, at the same time, it's like, well, this seems to have always worked since 2023 when he's been keeping stats. It works. But here's the other thing. I didn't like that you don't stay small. I don't like that at the end of the day, you had to wait all this time just to make a very tiny, inconsequential profit in relation to everything else that we talked about. But the third thing, I don't ever like being in a trade where it could risk my entire portfolio. And the truth is, with a system like that, where you keep having to up the ante, look, it might work, but it may not work until you're at zero. It may not work until you can't do that one more trade, that one more extra. And so, I don't know, I guess I just want to talk about this today I'm not telling people not to do something. You do what you want to do. At the end of the day, we're all responsible for our own decisions. And that's one thing that trading will teach you. No matter how many workshops, how many courses, how many gurus you talk to, you're clicking the button. At the end of the day, you made the decision, you're an adult. But I would highly recommend people think twice. And if it sounds too good to be true, too easy, it is. Our workshops, I think we do a really good job to make the information digestible, to understand it. But it takes about 6 to 8 hours to get through all the material. And then you have to go home and you're going to have to sit there and, make sure that you review the material again. And you have to go and practice and, go and get your repetitions in to truly have these ideas and these topics cement in your head. It's not like we're just going to sit there and say, hey, do this trade. You're good. Go home, go to sleep. Right.
There's a lot of learning to it. Part of that learning is trying a bunch of different things. Like you tried the method that was taught in this course, and it was smart to try that because I kind of view options strategies as like it's a big woods, right? And you're in a forest and there's a bunch of hiking trails through the forest. Some of them have pits, a lot of them have pits, but a lot of them have, like mountain peaks and whatever. There's a bunch of ways to get through the forest. Some of them are safe. I don't know why you're laughing. This is actually how I view it.
I'm just wondering where it's going to go.
Well, what I'm saying is there's a bunch of different paths. Some of them work. Some of them don't work. Some of them have a higher probability of working. Some of them are very risky, like this approach you're taking. In that approach, you can find yourself in a position where you have to bet a large percentage of your portfolio. You're not staying small. It's not a smart way to do it, in my opinion. It's not a smart way to do it. But you have to try several different paths through the forest before you figure out what works for you. And that's what we've done for the last few years. We've found these paths that work for us. And I wanted to, like you touched on our trading methods, our trading strategies. And there's this part of the problem with gurus is they have this proprietary system, like I mentioned, where it's like, join the Discord and put on trades when I say you put on trades. That's not our approach. We don't have this. We're not going to tell you, hey, go do this at this time, right? It's like, these are the tools that we've found to succeed. We want you to succeed. Go try it yourself. Try it with one contract, just like Nick did with this strategy that we decided wasn't a good strategy. But we've tried that with 50 strategies, right? And we found, 10 that we love that work for us, and we stick to those. We call those our pillars of success. And so doing that for yourself is important. But what I wanted to emphasize is we don't have a guru strategy for you. We're going to show you how we do it successfully so that you can do it successfully too. Right? Don't you think that's the right approach?
Yeah, I mean, yeah, of course I do. To each their own, though. I'm not here to criticize anyone. I want to emphasize what we are and what we're not. And I just want to be as transparent as we can. And, again, none of it's ever financial advice, but much like, I did an interview recently with Peter DiCarlo. And, Peter DiCarlo is another one. He, in my opinion, he's a lot like us. He doesn't tell you what to do. He doesn't tell you what trades to put on. He tells you what he's looking at, right? Like my subscribers know, I'll tell them what trades I'm looking at or what I recently placed. I don't care for people to follow me into trades. I mean, if they do, they do, but it's not like I'm putting them there for people to follow. But Peter, he's about teaching. He wants to educate people. He wants to show people that there's another way, and that's really what we're doing.
Nick, why do you want to put on workshops if you make all this money selling options or buying options?
When Greg and I were, I don't remember how old, but I think I must have been in 9th grade, so you were probably in 11th grade. We were at Barnes & Noble, and I was studying. I don't know what you were doing.
I feel like this is going towards Rich Dad, Poor Dad.
It is. We were sitting there at the little Starbucks area of Barnes & Noble, and I was doing homework for my AP history class. Again, I don't remember what you were doing. But this guy, my stepfather just opened a brokerage account for me. And we were talking about stocks and whatever. And this guy, unsolicited, just walking by, plopped this book on the table for us, said, you guys should read this book. It changed my life. And it was Rich Dad, Poor Dad. And that guy saw us and wanted to pass on something that he felt very valuable to people who he could tell were hungry and eager and ready to receive certain type of knowledge. In reading that book, you see the same thing again, right? Robert Kiyosaki, same thing. If you read that book, to get to the point where you're reading that book, you're probably in the right place, the right time to read something like that. And so for me, it's just kind of this, once again, continuation of this idea of giving back, something that we've learned that has to do with finances. I talk a lot about financial literacy. It's something I'm really passionate about for the younger generation. It's any generation, to be honest. I feel like it's the biggest gap in our society right now, is that for some reason we've had this, sorry guys, let me be on my soapbox here for a second. We've had this idea that it's voodoo to talk about how much you make, your investments. If you do, you're bragging. It's egotistical. It's just something you don't do. And I fundamentally could not disagree more with that whole mentality. I think you should be talking to everybody about how much you make, especially your colleagues. You should know where you stand. You should be talking to everybody about what investments you make. None of it should be done in a bombastic, braggadocious way. That's good alliteration. But it should be done from a humble and like, hey, we're trying to make each other better and we're trying to succeed together. And I want to know what you know. Tell me what you know, right? That's how we get better, in the hive mind, the team mindset. And so to me, that's what this is about. I've been working towards options for a long time. And then I got to a place where I finally figured something out and, figured out a system. And then I taught Greg what I had figured out. I taught Donnie Jr., what I had figured out. And, I think, Greg, you said the best way. You said that when I explained it, we sat in your kitchen for like 2.5 hours on a whiteboard. I'm just sitting there trying to explain everything that I have in my head and put it down. And the way you said it was like, you somehow took all these different puzzle pieces and figured out how they all connect together to paint the whole picture.
Well, yeah. So you made a roadmap for us. And that's what was really valuable, because you can go on YouTube and you can look up a YouTube video, what is theta, right? You can look at YouTube video, what is delta? What is a strangle? All these videos that are these discrete pieces of what we do. But unless you have a roadmap of understanding, putting those pieces together to create the mosaic that is options trading, it's going to be really hard to get. So that was the piece for me that put it all together.
Yeah. So that's why I do it. I mean, I just, again, selfishly, it makes me feel good to help other people. And I think when how many people are out there? I mean, you said not a lot of people are out there who want to trade. Not a lot of people are out there who are that interested. But for those who are, I think we have something valuable to show them another way. I think we have a valuable way to show, I think, honestly, I think a lot about my in-laws. And I've toiled with the idea of like telling them, hey, you can make some extra income just by selling covered calls against your stock. You could do it extremely safe, but it's a way you can make some extra income. I can give you some principles so that you don't ever have to worry about your shares getting called away or anything. But I hesitate to. But I have this information that I feel like could be so valuable for them. And I think about, in general, just people who are older, who are sitting there just living off Social Security and trying to take out as little as they can from their portfolio, when there's a whole nother way where they could generate more income to live a more valuable, fulfilling life that is safe, that is very low risk, but they don't know about it.
And why would you say covered calls specifically? Like, why would you recommend that the first step your in-laws take or somebody else take would be covered calls?
Because you can't lose money doing it.
Why not?
Because you already have the shares. So all you're going to do is sell high.
So the worst case scenario,
you sold high.
The worst case scenario, the stock runs up. You're like, wow, I made all this money. Your shares get called away at some point that's higher than the current stock price. So
and you get all that premium.
You keep the premium. You keep the stock appreciation.
Can't get hurt. Yeah, that's the only way you can get hurt is by doing something stupid, which would be a FOMO. Right? You're like, oh, yeah. I mean,
stupid comes in a lot in what we do, because if you started doing covered calls, then you might say, oh, well, let me try these other things. I saw something on YouTube. Let me try this other thing. And that's when you get into trouble, right?
Correct. Yeah. And that's, again, not to hype our workshop that we have coming up in January too much, and that I'll be doing here in December shortly. But that's what the point of the workshop is really to teach the mosaic, as you said it, but also to help you be less stupid, help everybody be less stupid, be less wrong, as Elon would say. Or, we just want to make sure that we are aware of the risk and the things that you shouldn't do before you do it. If you can do that, you're probably going to do pretty good.
You could do really well with just a few strategies. Like if you were to just stick with covered calls, that's what I would recommend at the same time. I've thought about, for example, I have my cousin lives with me part-time. He lives in another state. He flies down every week because he works down here. And he's also Nick and I are big Tesla investors. He also invests pretty heavily in Tesla. And I've thought about trying to tell him, like, why not sell some covered calls? But I am cautious to do that because I don't want somebody to take that one piece of advice and start watching YouTube videos and say, maybe I should sell some naked puts. Yeah. Maybe I should try some 0-day trades, because those things are how you get in trouble. If you can, this applies to me, probably to you, and to every other trader out there. If you learn a few strategies that work for you and you don't try to go out and try everything under the sun, you'll be successful. Yeah. That's the way to be successful in my mind.
And just to add clarity, though, we do trade naked puts. We do trade naked calls. We do 0 days. We, like Greg said, we have a handful of strategies and pillars of competency that we do. But to your point with your cousin, you'd be trying to teach him one strategy, and that's all he would know. And if he decided to start getting too curious and wandering in the forest, you don't want him to get lost and fall into a ditch.
That's my fear, because then I feel responsible.
Exactly.
Yes.
And that's how I feel about my in-laws as well, because that's their retirement. It's one of those things where I feel like a bad son-in-law at times, because I have this knowledge that I could share with them. And like I said 60 times already, now you'll hear me say it a million more times, they're adults. It's their own decision. But I would still feel a little, which is another reason why, with the workshops, people ask me all the time, Nick, can't you just record it and put it online and you could sell it that way? I'm like, I want to be there. There's an ownership that I need to be there. I need to feel like I did everything I can to make sure people understood and grasped the material. I need to be able to say, Greg, do you agree with what James just said? Susie, who's right? Greg, right? I need to be able to have that interaction.
I mean, there's enough YouTube content out there on every type of strategy you can do. But it requires a deep understanding of the terminology and the ability to ask questions about, why did you do this? Why did you say that? You said it this way, I didn't understand it, but can you explain it in a different way? That's what's needed.
Yeah. All right. That's our take on our approach, what we're about. So if that resonates, you can subscribe to this channel. You can join one of our workshops that will be coming up here in January. And yeah, I mean, we'd love to meet with you guys and see what you guys are doing. But maybe we can talk a little bit about some more exciting things. It's been a hell of a December, Greg.
Yes, it has been a hell of a December.
What do you think? What's going on with the markets?
Well, the markets are recovering. They recovered through November, right? We had about a 5% sell-off in November.
Well, just that context, we had 5% on the S&P, 10% on NASDAQ.
Yep. That recovered in that last week of the month, and it is going strong into December. I don't know about you, but December is treating me pretty well in trading. The same thing for you?
Yeah, so far so good.
It is, we have the Fed rate decision coming up in a few days. That has a 93% chance of the Fed cutting interest rates again, which was what caused, at least partially, the sell-off in November, I believe. So I think that's really positive for the month of December. I think that's probably that, and the jobs data not being too concerning, I think is going to set us up for a really good December. We still have out there, it's a little strange that Nvidia is still selling off, in my opinion. I'm sure you probably have some thoughts on that, but we have Palantir recovering and the rest of the market recovering. What are your thoughts on December?
I think there's a lot of things. I think the Fed news is the headline reason for why the markets are recovering, maybe. I don't think that's what's actually happening under the hood. I think under the hood, there's a lot of different dynamics happening. So first, it looks like we know who our next Fed chairman is going to be, who's going to replace Jerome Powell. Hassett. So
Bassett.
Hassett. Kevin Hassett, I believe is his name. He's been an economist. He's worked under the Bush administration. He's been in politics, in economics for a long time, but he's very Trump friendly. And what does that mean? Well, that means Trump, as we know, wants rates cut. He wants a full point cut. I don't think Kevin Hassett is going to do that, not a full point, but he's going to be very friendly to what Trump wants, and more importantly, what Bessent wants, right? The Treasury Secretary, who, by the way, I think is fantastic. I think Bessent is just, we're lucky to have him. No pun intended, but he's a treasure.
Yeah. Did you listen to him talk at Andrew Ross Sorkin's World Economic Forum?
Yeah, of course. Yeah, and I love Andrew too. Even though Andrew and I disagree very much on many topics that are outside the market, but Bessent really gave it to Andrew, I would say.
Yeah, I would say so. There are some good clips out there circulating around the internet.
But so I think that's something that's underlined. But there's two other items that I think are really happening that I would say a lot of retail aren't privy to. So one is the repo markets. And before we started this, you asked me, what's the repo market?
I have no idea what the repo markets are.
So the repo market, so the way it works, you have all this action happening out there every day with trades, stocks being bought, options, treasury, bonds, all this nonstop.
So we're not talking about cars being repossessed?
No, we're not talking about cars being repossessions, especially not Teslas. But what the repo market is, it's essentially a way to keep liquidity in the markets. So when trades happen, stocks move, transfers, companies buy each other, money needs to be borrowed, all this stuff is constantly happening in the markets. The plumbing in our U.S. financial plumbing, it's not geared to have settlement for all those in real time or that day. And that's where the repo market comes in. The repo market is essentially a short-term loan that companies, brokers, hedge funds, etc., can use to settle trades, negotiations, borrowing, right? It's access to capital that happens immediately, while everything else takes a couple days to settle down. Without it, everything will come to a halt because you have to wait for things to settle before anything happens. So you can think of it as it's the lubricant for the plumbing of the financial markets. All right, so that's what the repo market is. When the repo market gets tight, meaning there's not a lot of ability to access funds from the repo market, that starts to slow down liquidity, and that starts to slow down economic progress, movement. That's not good. Recently, we started to see the repo market get a little tighter, and that's kind of a signal for like, okay, that's not good. One of the reasons why they're ending quantitative tightening, well, they did on December 1st, is because of that, right? And that's where the Fed has been essentially unloading their balance sheet.
The tightening is reducing, or is unloading the balance sheet.
Unloading the balance sheet.
So they're not buying as many.
They're selling back into the market.
Right.
Exactly. So when they buy, they're supplying liquidity to the market.
Yeah.
They're easing.
That's quantitative easing, right?
Exactly. And so they're ending quantitative tightening. But the other thing that they did is so banks have to have a certain amount of cash on hand. All right. Every single day at the close of the day, they have to have a certain amount of cash on hand. Well, the repo markets are how they make sure a lot of times that they have a certain amount on hand. But with the repo market getting tighter, the Fed is talking about lowering the requirement for the banks and how much capital they have to have on hand, how much cash they have to have on hand. And by reducing that, that frees up a lot of the funds in the repo market, which helps the movement of money again. And the movement of money, that is what really allows the economy to go and be robust. So in many ways, this is a offhand way of doing quantitative easing. So that's very, very interesting.
That is interesting.
So that's one thing that's happening. The other thing is that we have the Supreme Court set to make a decision on Trump's tariffs. Right now, if you look at the poly market or anything like that, it's 70-80 that the Supreme Court is going to say that Trump can't keep these tariffs on. The markets would see this as bullish. Because if you think back to April, Liberation Day, the markets had to price in all that noise, all those tariffs, however they perceived it, the market had to price that in. And we did. And then we rallied, right? It was crazy April.
Yeah, I remember.
It's not one we want to relive.
It's just burned in my brain forever.
Yeah, exactly. But if the Supreme Court would essentially say that it's unconstitutional, you can't do this, that could also stimulate the market, because all of a sudden that would induce even more liquidity, and it would be more cost effective, more everything for businesses. You throw in the repo market, what I'm talking about, with banks getting more liquidity pumped through them, the potential what could happen with tariffs, and then you throw in rate cuts coming in with a very White House best and friendly Fed chairman. There's a lot of positive catalysts, a lot of liquidity, a lot of money can be moving into the markets. And I'll finish off with one other point that I want people to make sure that they're aware of, and that's taxes. And well, actually, before we get into taxes, keep in mind, if all that starts to happen, you're going to see treasuries come down, because money right now is hiding out in the safety of treasuries. As that liquidity increases, as you have rates come down, people want to get that money back to work and be more risk on rather than risk off. So that's good for bonds to come down, which affects everything, right? The Fed's not the only thing that affects yields, right? Fed affects short-term rates. But as risk comes off and you see all these bond prices, treasuries start to come down, that means mortgage prices go down, car ownership goes down, or as far as costs, right, to take a loan out, interest rates on them. It has businesses can get cheaper loans, right? You start to have all this catalyst in the market. So everything that you and I experienced in 2022, when you and I were actively fighting the Fed as they were raising rates,
don't do that.
The opposite,
right?
What happened? And so the last thing I'll touch on was, like I said, was taxes. The big beautiful bill, the taxes. The tax benefits will go into effect right now in Q1. This will, I believe, have a meaningful effect. One, it keeps the Trump era tax credits in place. Two, for anyone who has tips, anyone who's working overtime, they don't have to pay tax on that anymore. And I know a lot of people say, oh, that only affects 8% of people. Okay, but the people who are getting paid tips, that 8%, they're the people that need it the most. They are like, it's kind of tone deaf for me when I hear people say, well, it's only 8% of the population that will benefit from no tax on tips. Well, guess what? People who get paid tips, they're probably the ones who are hurting the most right now. So for them, it's not necessarily inconsequential. You know, people who are working overtime, if you get paid overtime, guess what? You're probably in a job, or you're probably in a stratosphere of economics that it really means something to you. And so I think that has a really big deal on what it can do for just the entire market and the entire economy. And I think people are kind of underestimating it. There's doubling of the SALT tax, right? There's lots of other things that are going to happen, but I wouldn't underestimate that. So, you know, I'll do a little spoiler alert for my predictions for 2026, which we'll do in our first official live video. But I think, contrary to what the past few years have been, I think the first quarter is actually going to be a bullish first quarter. So that's my thoughts right now on the markets.
It's interesting that you're talking about interest rates coming down and how that could be a very bullish condition in the market, because right now the risk-free rate, meaning you can put your money into something, a bond, extremely safe bond, and get 5.5%. Lots of money we put into those bonds, or have been put into those bonds, because 5.5% is pretty good, right? Why put it in the stock market if I can get 5.5% guaranteed, no risk, right? So as interest rates come down, people start taking money out of bonds because the risk-free rate will be lower, right? Yep. I don't want to earn 3% of my money when I can put it in the stock market. So that money will move from bonds back into the stock market, potentially causing a rally in 2026.
Exactly. Yeah, I think 2026 could be a very, very bullish year. But you asked about Nvidia.
Yeah.
So I have a point of view. So you're right. Nvidia has kind of been stagnant while Meta, Tesla, Palantir have all been, Google have all been booming, right? But if you look at, let's say, Microsoft, if you look at Amazon, if you look at Nvidia, right, the other Mag 7 companies, they're kind of just where they've been. Not much movement. But I think there's just a consistent rotation between these companies. You know, when we saw Nvidia in the 200s and Palantir in the 200s, Meta was dropping down to the low 600s into the 500s, right? So I think we see kind of this rotation, right? Apple's out of favor, Google is out of favor, and now they're back in favor. So I don't really think there's much here. I think that these companies and the stock have their own kind of digestion cycles, and then they continue. But I don't think there's any issues with Nvidia. I think Nvidia is one of, if not the healthiest company out there right now. More demand than they have supply for. They have huge backlogs. They're doing 75, 78% margins. I mean, and they don't even have any outlays as far as really infrastructure because they're chip designers and they have a kind of a moat in CUDA as their main software that goes with all their GPU. I mean, it's
do you think the news story from a few weeks ago of Michael Burry shorting Nvidia and these rumors that they have stockpiled inventory that they can't get rid of, all that is kind of behind Nvidia at this point, or do you think it's still keeping the stock price flat or down for the last 30 days or so?
Maybe for a handful of people, they actually believe any of that noise. The inventory, that's like saying, hey, Tesla has inventory. Yeah, they want to have inventory because you know what you don't want to have? Someone who wants to buy something and you don't have something to sell them. You don't want that.
How many times has Tesla been criticized for having inventory?
So many times. And meanwhile, their inventory for Tesla, their inventory has always been the lowest on the market. Like their inventory is historically like 12 to 14 days, which is nothing, right? Like that's literally nothing.
I had to wait 3 or 4 weeks for my Cybertruck.
Yeah.
I got a month ago.
Exactly. Yeah. So with the Nvidia, and again, they have more orders, right? Look, you need to overbuild to have some inventory because it takes time to move atoms from point A to point B. People purchase. It's again, we don't need to regurgitate, especially I imagine most people here follow Tesla. It's the same story as with Tesla. And then the Michael Burry thing, he's just another guy who sees something that he thinks is something. I don't want to not give him credit. He made a hell of a call once, and it was a once in a lifetime call. But even he would say and not only would he recently did a podcast where he talked about it. You know, his short on Nvidia or Palantir or Tesla, they're just small itty bitty shorts. It's like everyone associates like, well, if Michael Burry has a trade on it, Michael Burry has a short on this, that equals Great Recession, housing bubble. Right. And it's like, guys, he could just have a short on it because he just thinks the company's going to come down. You know, I mean, he does think overall that over the next 2 years that the market's going to have a big sell-off, but it's not that he thinks Nvidia is going to go bankrupt or Palantir is going to go bankrupt or anything like that. He just has a short on it. He thinks they're overvalued. The same way so many other people think that these companies are overvalued, in the same way they've all been wrong for all these years. And it's not like Michael Burry shorted Tesla before. He's doing it again. Yeah. And he's been burnt every time.
Do you think Tesla's overvalued? Currently?
Do I think Tesla's overvalued right now?
We're kind of at all-time highs. Close.
Okay.
Not quite there.
That's a good question. I always say that I think that the market is extremely efficient, right? I don't think you're really going to get a lot of edge in the market, or I don't think, Greg, you're going to see something or find something before really the general public has or the market's priced it in.
Nancy Pelosi has it first.
Yeah, exactly.
Than the rest of us.
Well, not anymore. Tesla is unique. I think people who have a Tesla, people who use FSD on the daily, and people who are part of the Tesla community have asymmetric information.
I agree.
And I think that asymmetric information allows us to make an asymmetric bet in our investments in Tesla, whether it's shares, leaps, whatever you want to do. So based on what I believe, and I can't prove what I believe is correct until it happens. And then I can say, well, it already happened, so what good is it, right? But my asymmetric information is that I'm convinced full self-driving is solved. I believe robotaxis are solved. I think it's over. I think they're just fine-tuning the internal software for fleet management and all that. We see that the robotaxi app just went live in 7 different countries. It's not like it's just an app store update that every country got it. No, it's very 7 specific countries. Find that interesting. We see that Elon said that about 8 cities supposed to be by the end of this year. So I think any day now, we'll see. It probably won't happen December. It'll probably be like sometime in January. And people like boohoo about it. And it'll happen in January and be like, oh, Elon's right late. It's like, oh, yeah. But I'm highly convinced that this is really about to have a big move. And I think that's why the stock has been climbing. Not only climbing, I think that's why it's been able to hold a $400 stock price, is because the market, or those who have the asymmetric information, understand what's happening. So if you don't have that asymmetric news, I can fully understand why you think it's overvalued. And I think if that's all I knew, I would say it is overvalued. But based on what I know and my experience and what I believe is about to happen, I think it's undervalued. What do you think?
I mean, I agree. So I've, I bought a Cybertruck a month ago. I have FSD 14.2.1 point, whatever it's on.
Yeah.
But
I think that's it. Yeah.
2.1. And it is sentient. I was telling you the other day, I was driving around on Friday and I was going through a school zone. I didn't even realize a school zone was coming up. There's a sign, a little like flashing light, and the light was flashing. And before I even realized I was going through the school zone, my Cybertruck slowed down to 20 miles an hour. I didn't realize it until it slowed down to 20 miles an hour. And it went all the way through the school zone at 20 miles an hour and then sped back up to 35, whatever the speed limit was. And that's like, it's insane. It's insane. It's sentient. Why would you, I know people love Rivian. They're beautiful cars, but why would you buy any other car, particularly any other electric car, that doesn't drive itself at this point? It just doesn't make any sense. It's safer. It's more enjoyable. You can, especially for people that have long commutes, dogs, animals, like kids turning around your back seat, like, kids mess around the back seat. Hey, cut that out. It makes no sense at this point to not have full self-driving if you can.
I agree. Did you see the Marquise Brownlee?
I watched part of this video. I mean, you should finish what you're going to say for the audience. It was like some Chinese car company.
Yeah. So he spent, I guess, a few weeks with a Chinese vehicle, and I'm going to butcher the quote, but he approximately said that, so in the seats, the music can be playing, and the navigation audio will essentially be split out, so music can keep playing for everyone else, and the navigation will play in the speakers of the driver's car seat. So it'll say, hey, take a left turn up here, but only, I wouldn't say only, but he's the only one that can really hear it, because it's just coming out of the speakers of his car seat, while everyone else gets to keep listening to the music uninterrupted. And he said this is one of the best software features that he has experienced in a car in a long, long time. That blew my mind. Meanwhile, like you were saying, our vehicles, our Teslas, when was the last time I even had to listen to navigation?
Yeah. Like can you have audio and navigation in your Tesla? I've never had it.
Yeah, like the idea of even having to listen, how do you even think about when to take a turn? Like, what?
Yeah.
Like, those days are long. Those days have been gone for years for me. Right. I don't think about where the exit is or what highway or what turn. Like,
well, you're in full self-driving.
Exactly.
Yeah.
But so it was just it's just baffling that he would say such a comment when he's supposed to be such a tech guru, tech YouTube guru.
He used to be a great tech reviewer. I haven't found much interesting on this channel lately. Maybe just because he's not, doesn't seem to be a huge fan of Tesla.
I think
anymore.
He has TDS, Tesla derangement syndrome.
Yeah, maybe.
Or
maybe he's being
EDS.
paid. Maybe he's being paid by other auto manufacturers.
Could be. I mean, yeah, I don't know. It's a little disheartening because, you know, one of his like earlier real big videos was actually touring the Tesla factory back in when it was in Fremont, and he did a great job there. And I'm not saying that he can't review other car manufacturers or anything like that, but he just seems to have nothing good to ever say about Tesla, and always feels like he has to have like a criticism of FSD, and he's never testing the latest software when he does a test. He doesn't test often. His critiques are always like, I don't know, they're just shallow. I don't know.
I mean, the whole industry is trying to do everything they can to slow down Tesla, stop Tesla. It would not surprise me if he's being paid to not review Tesla positively, or even to boost other brands, Rivian, whatever else. That really wouldn't surprise me at all.
Yeah,
a lot of money has been spent to criticize Tesla, as you well know, in the news particularly.
I agree. All right, well,
dry run number 2 in the bag.
I think dry run number 2 is in the bag. Right. Hopefully, you guys can let us know what you think. I know we didn't talk too much about trades specifically, but more of that will come. If you guys are interested, go check out my latest YouTube video. I posted a pretty deep analysis of a trade I did on Meta. Ended up pretty good. It's actually, the trade's still on, but we've already netted 27 grand on it. So not too bad for about 30, 40 days. Go check that out. And yeah. And
we'll repost the link to this new YouTube channel. We'll both share it on Nick's X. My X will be on there as well. I can't tell you my username right now. I think it's Greg Proctor 1. Is that?
I don't know off the top of my head. Look at your phone. And while he looks that up, do us a favor, subscribe, like, do all those things. We will release more information about our next workshop. Like I said, at the end of next week in January. And
my X handle is Greg Proctor 19. But let us know what you think about this format, the way we're talking about things. If you enjoy it, if you want to hear deeper level stuff, higher level stuff, you think the content is great or terrible, let us know.
Yeah. All right. Thanks, everybody.
Thank
Peace.
you.